Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 37. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Now, we do this video series on the first of every month. And the reason we do it every month is because we want to make sure that we keep tabs on how the asset class is progressing as a function of time. On any given day or week, of course, there's a lot of noise, but providing a monthly update should at least keep us more or less on track with the ultimate direction of the asset class as a whole. The fundamental purpose of this series is to assume, and it is a big assumption, but is to assume that the fair value of the cryptocurrency asset class is increasing as a function of time. The reason for this is, of course, because we think, or at least I think, that adoption does occur on a very long time scale, right? You might not always see it on a day-to-day basis, but you just fast forward through the years and you can see quite a lot of adoptions going on. And the idea, of course, is that the fair value of the asset class increases monotonically, meaning that it only ever goes up. Now, markets, on the other hand, do not only ever go up. They tend to go up, right? Like markets tend to go up, and occasionally we will have bear markets. You can see the asset class as a whole tends to go up as a function of time. Again, we're plotting out here the total cryptocurrency market capitalization. So as a function of time, the market cap tends to go up. Okay, we can make that statement. Now, in any given cycle, you have bull markets and bear markets and accumulation years and whatnot. But as a function of time, if you cut through the noise, the fair value goes up and the market cap goes up. However, the market cap of crypto has a way of going through overvaluation phases and undervaluation phases. You can see that we were overvalued in 2011 and in 2013 and in 2017 and in 2021. You can see that we were undervalued in 2012 and in 2015 and 2016 and for most of 2019 and 2020, and then also, of course, mid-2022 to the present day. So all in all, there are phases where we are overvalued and there are phases where we are undervalued. Now, we must remind ourselves that we spend a long time in overvaluation territory and in undervaluation territory. You don't typically just go into the overvaluation territory for a few months. You tend to spend a long time there. With, of course, a few exceptions. You will see that in 2019, we spent a little bit of time in overvaluation territory. This was the pre-halving year. 2015, we came relatively close to breaking above it, but we were unable to break above it. And in 2011, you can also see that we were briefly above it. Okay, but for these sustained moves where you spend, a year or two above the fair value logarithmic regression trend line, we can see that it tends to occur, not always. I mean, here's an example where you can see this move actually occurred before, this first move here occurred before the halving, but we tend to see it occur after the halving, right? After the halving is what we've seen in the last three cycles. Now, as of July 1st, the total market cap of crypto is coming in at 1.198 trillion. The fair value, according to this fit, which is fit to all data, is 2.087 trillion. This represents an undervaluation of approximately 42.67%. What's interesting is really for the last year, the market cap has mostly gone sideways. If you were to zoom in, I mean, it doesn't feel like that, of course. It feels like it's been all over the place for the last year. But if we're honest with ourselves, the market cap today of crypto was also more or less the market cap about a year ago. as well. Now, since that time, we've gone to lower valuations and we've also gone to higher valuations. Again, while Bitcoin is sitting at its yearly high at around 31K, total market cap has not put in a new yearly high at this point. This goes back to the idea of what we are experiencing right now is a fundamental shift in what people are putting more of their money in. And that, I think, is what we're seeing. We're seeing a rotation of capital from the altcoin market to Bitcoin. That is what I've said many times over the last year, that we're just seeing a fundamental shift in the allocation that people have. They're more interested in the blue chips during this phase of the cycle than they are the riskier altcoins. And so normally during these pre-halving years, what you see occur is that rotation of capital where people get out of the riskier stuff and they hunker down in Bitcoin. And I don't see why this cycle should be any different. And so far, we have seen that play out. Because while total market cap has more or less remained unchanged for the last year, the dominance of Bitcoin has gone from 39% to 51%. So again, we are experiencing that rotation of capital. In any given week or month, it might not be so obvious, right? It might not be so obvious in any given month, but when you zoom out, you can see it happening, right? You can see it clearly happening. Because one of the questions I get in this series is, well, why are you so against the altcoin market? If we're in undervaluation territory, okay? And admittedly, it is a fair question, okay? In prior cycles, I would have been right there with you, okay? But what I've learned, at least my own navigation of the cryptoverse in the past, is that normally Bitcoin provides better risk-adjusted returns at this phase of the cycle. And if you look at most altcoins, they're just bleeding on their Bitcoin pairs. That's not to say that in any given month they can't go up, but over the macro scale, most of the altcoins bleed against Bitcoin. So you want to value your portfolio in terms of its Satoshi value. Okay? If you've just spent the last year accumulating altcoins, and maybe they're at the same USD valuation that they were a year ago, but many of them are down 50% or more since then. If you actually go look, you might feel like it's an okay thing, but I mean, Bitcoin has vastly outperformed. And so that's why I've said, at least I talk about, again, this more on ITC Premium, is that, during this phase of the cycle, Bitcoin heavy crypto portfolios tend to perform better than altcoin heavy portfolios. Now, anytime I say that, there's always some pushback, and some of it's fair. And where it comes from is there's this idea, well, there are some altcoins that are outperforming, so why do you ignore those? I'm not ignoring those. It's just if you understand where I'm coming from, there's always going to be, new things popping up. There's always going to be some altcoin that's going against the trend, right? But the general trend of a rotation of capital from the altcoin market to Bitcoin has been what we have seen. Okay, that has been what we have seen. And I think that it will continue to play out for quite some time. Now, who knows what happens in the month of July? I don't know. But in general, we have seen this trend play out. And one of the interesting things about this chart is that, at least so far, it looks more like this cycle over here than this one, than 2019. Because in this cycle, what happened is that we capitulated below the fair value logarithmic regression trend line, and then we more or less went sideways until we hit the lower green regression line. Okay, now what's interesting is from this capitulation in January 2015, we didn't really get to the lower part of this until about Q3 of 2015. Where are we today? Well, you can see that we came below this in mid 2022, but we still haven't hit the lower green logarithmic regression trend line, right? We still have not hit that. Now, again, there is no guarantee that we hit it. I mean, if you look at the prior cycles, we did come pretty close. But what I've said before is that there is this idea that the real bull market that people want to a sustained period of new highs and not just like a move like 2019 would typically come after you go into the lower part of the regression line, right? Like, so the lower green logarithmic regression trend line. That is what history shows us. Now, if you think about all the price action that's occurred over the last 6 months, it certainly doesn't feel like sideways price action, right? I mean, a lot of people aren't going to say that the market has gone sideways. But again, I would challenge you to just look at this chart and say, that is how history will likely remember it. I mean, in the same way that we look over here and say that the market went sideways, you're probably going to look over here and say the market went sideways as well. It's just that when you're living through it, it doesn't feel like sideways. Why doesn't it feel like sideways? Well, one of the reasons is because Bitcoin has gone up 2x, but Bitcoin also went up about 2x over here as well. The other reason it doesn't feel like sideways is because the price action has generally been higher lows for Bitcoin. So then why does total market look sideways? It's because the altcoin market has been going lower, right? So while Bitcoin has generally gone up, as you can see, right? While Bitcoin has generally gone up, total 3, the altcoin market, has been going down. So again, just overlay the price of Bitcoin with total 3. This is why total market cap looks like it's going sideways. Because yes, while Bitcoin has been going up, you can see that there is a divergence here to some degree on total 3 where it started going down. So again, this is where the argument comes in of what we're witnessing, in my opinion, is a rotation of capital from lower liquid assets to higher liquid assets. And that's why when you look at things like total 3 divided by Bitcoin, you'll see that in general, it's an oscillator at best, right? An oscillator at best. And I mean, again, like zooming out, you can really see what I mean. Like we sort of just ebb and flow from one extreme to the other. And when you're up here, no one ever thinks you're going to go down here. When you're down here, no one ever thinks you're going to go back up. But I believe what we're experiencing right now is a rotation of capital from altcoins to Bitcoin. Because as this goes down, it means the dominance of Bitcoin is going up. So that's why we spend so much time talking about that, is because if you blink, you can miss it, right? Like if you blink, you can miss it. You might assume that everything in the cryptoverse is doing well, when in reality, the altcoin market just closed 3 red months in a row. You might say, what? Is that true? Doesn't feel like that, right? I mean, it certainly feels like the last several months haven't been all that bad, but that's because you're looking at Bitcoin. Look at the altcoin market. 3 red months in a row. Again, the rotation of capital. So Bitcoin has gone up, the altcoin market has gone down. So net, you're watching total market cap more or less go sideways. Again, it can oscillate a few hundred billion. What's a few hundred billion among friends, right? I mean, this is an asset class that has volatility, and we need to accept that volatility for what it is. So yes, today the total market cap of crypto is at 1.197 trillion. The fair value is at 2.087 trillion, representing an approximate undervaluation of 42.67%. As I have said in every video this year, I have said that I believe we will spend the duration of this year between these two trend lines. I do not think we will see us go outside of these two trend lines. We could deviate briefly. There's always a chance we get a brief deviation, just like we did in 2019. Always a chance something like that happens. It could be to the upside, it could be to the downside. But I would expect us to spend either the entire year or a majority of the year below the red line and above the lower green line. And so far, this expectation has been met. In any given day, it feels like the market's going crazy. You zoom out, and you're going to wonder why you stress so much about the market during this phase of the cycle. Okay? So for me, as I've said, right, Bitcoin has been, and at least for a while, will continue to be the best risk-adjusted returns play in the cryptoverse, right? I think it will provide, in terms of the risk reward, it provides the best option at this phase of the cycle. That doesn't mean that Bitcoin can't go down. We know that it can. But it's just that if Bitcoin goes down, it'll likely take the altcoin market even further down. And if Bitcoin goes up, then we would expect the altcoin market to bleed to it, because we're in the phase of the cycle where we're getting that rotation of capital. Total market cap sideways, Bitcoin has gone up, total 3 has gone down. Whatever Bitcoin does, we would expect it to generally outperform the altcoin market, whether it goes up or down. Okay? So that's the general expectation. Now, if you take the percent difference between total market cap and the fair value logarithmic regression trend line, you get a chart that looks like this. I really like this chart, right? I mean, I feel like it tells a fairly compelling story, and that is that the extension from the fair value diminishes each market cycle, right? Hits the green line, but the extension from the fair value diminishes at each major peak. You can see that as we go through the cycles, it's pretty clear. What's also clear is that we tend to spend a lot of time in undervaluation territory. And the thing that I mentioned earlier, I'll say again, this cycle looks more similar to this one over here than the last one. Because remember, the last one only barely came undervalued, bounced back up, then went down for about 9 months, and then, just went into another bull market that just went up, 20x in a really short period of time. Is what's going now, is what has been going on. I mean, I think about it like this, like total market, if it were doing something very impressive, then why does the chart look like this, right? It hasn't really moved a whole lot down here. This is nothing compared to the bull markets that we've seen. Again, a rotation of capital. If you were to plot this out for, say, Bitcoin, it would look more impressive. If you plot it out for just total market cap, it doesn't really look as impressive, right? Because the altcoin market has bled. And it's because of that bleed that I think has led the Bitcoin price higher as liquidity moves from the altcoin market to the blue chips. Now, what you'll notice is that, as I said before, we're currently sitting about 42.67% undervalued. So let's just call it 43% undervalued. If you look at where we were last cycle before the real move came that took us to new highs, you can see that we actually went to about 57, 58% undervalued. I mean, it's not a fair comparison exactly, because this move here doesn't actually capture the full wick that occurred. So if you actually capture the full wick, we know that it went lower, in fact, than what this is showing, because this just captures daily data. But if you were to actually show the wick, it actually did go much further down, closer to approximately a 65% undervaluation. And what's interesting is if you go back to the cycle before, you can also see that we tagged about 60% undervaluation. This one was about 60% undervaluation, not including that wick. So really it went up probably about 65% undervaluation. This cycle was about 60% undervaluation. The cycle before was only about 40% undervaluation. But the cycle before that was about 65% undervaluation, right? So you have 65%, 65% over here if you include the wick, and then 60%. The lowest we've been undervalued so far this time around is just over 50%, right? So maybe like 50, 51% or so is the lowest at this phase that we've actually been undervalued on a daily close. I mean, there have been some wicks lower and whatnot, but that is what we're currently looking at. And so again, I think there is a case to be made that this could actually continue trending sideways / down. Now, down does not necessarily mean that total market has to lose valuation. It doesn't mean that it won't, but it doesn't mean that it has to. Remember, total market cap, the fair value is a monotonically increasing function. So if we were to go sideways, we would get further away from the red trend line, right? From the red logarithmic regression trend line. If we go sideways, we get further away from it. Therefore, going sideways actually makes you more undervalued. If we were to go sideways until we hit the green lower logarithmic regression trend line, it would take from where we are right now, from the total market cap right now, it would take until approximately the summer of 2024. So approximately 1 year from now is how long it would take for us to reach a 65% undervaluation if the market cap stayed the same, right? So if we did something like 2015, 2016, and we just went sideways until we hit it, from where we are right now, it would take approximately 1 more year. If we were to go down into it, we would have to go down to about a 700 billion market capitalization, about 700 billion or so. If we were to go down to it, say, when we went down to it last cycle, so in Q1 of 2024, because again, we did it over here in Q1 of 2020. If we did the same thing over here in Q1 of 2024, it would correspond to around 900 billion, right? So it all depends on when it happens. And of course, it doesn't have to happen. There is no guarantee in these markets, right? There's no guarantees as to anything, specifically going to happen. There's our projections as to what might happen. There's probabilities as to what we think could happen on any given day or any given week or any given month, but it's impossible to know. And at the end of the day, I certainly cannot tell you what the price of Bitcoin or any altcoin is going to do tomorrow. My general understanding of the market, sometimes it might be ignorant, admittedly. My general understanding of the market at this phase is that we're experiencing a rotation of capital from the altcoin market to Bitcoin. The dominance of Bitcoin is going up, regardless of the direction of Bitcoin USD. Total market going sideways. Bitcoin has gone up. Total 3 has gone down. Rotation of capital. 43% undervaluation. Same undervaluation that we've been at for a large part of this year, even though Bitcoin has gone up. So the point is if we were to go back to where we were in November at some point, right, it wouldn't take nearly as long to get to 65% undervaluation. If we went back to where we were back in November, it would only take until September of 2023 to reach 65% undervaluation. Now, there's an interesting thought here that total market, there's a chance that total market could put in a new low, but Bitcoin not, right? Like there's a chance that something like that could happen where the entire asset class goes lower, but Bitcoin puts in a higher low. There's a potential outcome where that could occur. And the reason why that could occur is because people are just leaving the altcoin market for the relative safety of Bitcoin, okay? So that's just one potential idea. Again, it's not necessarily the most likely outcome, but it is one thing to think about because again, like Bitcoin has gone up while total 3 has gone down. Rotation of capital. So at the end of the day, we can see that we do tend to spend a long time in the undervaluation territory. I also want to just, briefly say for a minute, I know I've been very critical of the altcoin market for the last 18 months. I hope that you understand why I have been. And if you don't, then perhaps that's my fault for not being a better communicator at explaining why Bitcoin at this phase has and what I think will be continue to be a better risk reward option. Okay. But I also will say, the people, if you are accumulating altcoins, if you are, and I'm sure I'm speaking to a lot of people, right? If you have been accumulating altcoins and you still are, and you're down on your investment and you're kicking yourself because, you bought these altcoins in June of last year and you watched them go down 50%. And now you're watching Bitcoin 2x off the lows, whereas the altcoin's down 50% from where it was. Again, like back over here in August of 2022, total 3 was at 454 billion. This is quite a move down here. This is a 27% drop or so, while Bitcoin is up significantly from its June 2022 high, right? 20% up for Bitcoin, 20-something% down for alts on average. Some altcoins are down a lot more. Some altcoins have outperformed Bitcoin, and you're probably wondering what I'm saying. Like you probably don't agree with it because you have an altcoin that has outperformed. But I will say, as I've said before, it's not that some won't outperform. Many can and will. It's just that when you take the asset class as a whole, we are at the phase where most of them bleed back to Bitcoin. That doesn't mean that there's not a $5 million market cap coin that has pumped 100% since last Tuesday and you think it's the best thing in the world, right? I'm not saying that. It's just in general, that is where we are in the cycle where the altcoin market capital goes from the altcoin market to the blue chips, okay? So the thing I will say, and I was sort of saying this earlier, is that if you're in that position where you have been buying altcoins and you're down, 20%, 30%, and you're probably wondering, well, why didn't you just buy Bitcoin because it's up? I will say, it's easy for me to say that. I mean, I've lived through these cycles more than once, so like I learned this the hard way multiple times. It's not like, it's not like I just looked at a chart and knew this was going to happen. It's like I lived through this brutally in the past. So it's more so just a warning that Bitcoin would outperform the rest of the market more than likely for a while. I will say that some of them will probably come back. Okay, like even though I still think that the altcoin market bleeds back to Bitcoin, I do think that some of them will eventually come back, and some of them could easily go to new highs eventually. Okay, it never feels like it, especially when you're in the pre-halving year. A lot of these altcoins are down 95%. By the end of the year, they could be down even more. I don't know, but some of them will eventually come back. There is a danger, though, that some of them will not, and you need to accept that. That's just a reality that we all have to accept, that some of them will never come back. They might just fade. It depends on the quality of the projects you're actually investing in. The truth is that a lot of them will never come back because a lot of them are cash grabs in the short term, right? They're just people, they spin up an altcoin project, they promote it on Twitter, and they disappear. Okay, these will likely not come back. Some of the projects that don't do that kind of stuff, but are actually trying to build something useful, those could actually come back during better times, okay? So I'm just saying, right? I know I've been critical of the altcoin market. I still likely will be critical of the altcoin market for at least a few more months until I see those Bitcoin pairs at levels that I'd like to see. But in the end, this is the undervaluation territory, okay? So the projects, of course, could eventually recover, okay, even from these levels. Even though total market has gone sideways, total 3 has gone down, right? And that's, I think, the issue is they're like falling knives, right? They're like falling knives, and it's hard to know. It's really hard to know where the knives stop falling. Again, looking at like monthly candles for total 3, you can really see. I mean, it looks really similar to this, right? Down, up. I mean, it kind of looks similar, right? Anyways, just something to think about. I will continue to provide my opinions on the altcoin market as I see fit. I do think they will continue to bleed back to Bitcoin, and that we will likely spend the duration of this year between these two logarithmic regression trend lines. I do think that at some point we likely will hit 65% undervaluation, but for all I know, it might not even be this year. It could be early next year. Last cycle, when it occurred, it was in Q1 of the halving year. The cycle before, it occurred in Q3 of the pre-halving year. So who knows, right? There's a 3-quarter window where it's occurred before, from Q3 of the pre-halving year to Q1 of the halving year. So I guess we'll just wait and see. In general, my expectations for the asset class is to head to 10 trillion, okay? And I do think we will eventually make it to 10 trillion. That is a target we've had on this channel for a long time. I know right now we're only at 1 trillion, so it doesn't really seem like it's about to happen. And honestly, it's probably not about to happen. But you never know. A lot can change in a few years. Who knows where we'll be, a few years from now. Again, the general goal is to reach that $10 trillion milestone, plus or minus a few trillion. As we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends?